It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes, and we want to get you ready because like 3 weeks from now, that's it. The jig is up, the die is cast, and 2015 is the way it is. And if we can help you to save money, that's our goal. I tell you, that's what we do at EG Tax. I have Tiffany Fabian in the studio with me. Hey, Tiff.
Hey there, Esther.
And Christopher Fabian.
Hello.
Hello,
Esther.
Christopher. And so this is our last 3 weeks before tax season where you can facilitate some changes, and that's part of what we want to do. We also want to talk about some of the things that are coming up for tax season. We have a brand new office this year that's going to be in where?
Newfane.
Newfane.
Very excited. We have our staff and we have the location, and very, very excited.
Is it on Main Street, Chris, do you know?
I believe it's right by Wright's Corners.
Cool. So you people up in Niagara County, that neck of the woods, EG Tax is going to be there for you. The other thing is if you're somebody that's looking for a clerical position and you like a fast-paced environment, we're looking for telephone help. We're looking for nice people who like to interface with clients in a receptionist kind of facility. And you can call our corporate office at 632-7886 on Monday and ask for Maria or Karen or Tiffany and Chris, and they'd love to have you come in and interview because we're looking for clerical people for tax season. Right?
Yep. We get that phone calls throughout the week. There's people calling. They've listened to the show, which is great.
And then the other thing is those of us who have been waiting for the extension to the tax extenders. As of November the 30th, there was an article in one of the business magazines that says that Congress, House and Senate are putting together a bill to extend the extenders. And so the sales tax deduction, the $100,000 transfer between your IRA to a charity,
Tuition,
your tuition and fees
solar
deduction,
cars,
the teachers, the teachers adjustment,
sales tax,
all that kind of stuff. They're trying to put it back in the law, so hopefully that's going to happen. And as soon as it happens, we'll let you know.
Right.
I'm Esther Gulius, the Tax Lady, 803-0930, 803-0930, star 930 on a cell phone. And so let's talk about what can you do?
Well, wait.
Yes.
How about the other exciting news that we brought up 2 weeks ago?
What's
that
that?
our radio show is now going to become a TV show.
So while you're listening to us on Saturday, you can watch this again on Tuesdays on WBBZ. So we're going to put that on Channel 5.
Right.
And so you can actually, so if you call in, you'll hear yourself on the radio and hear yourself on TV, and that'll be cool.
So I can't wear my PJs all the time now?
Well, you come out of the office while you're doing tax returns. I don't think you're anywhere in
No,
anyway.
That's true.
So we do it. So, we're busy writing tax returns during tax season.
Yep.
So we leave the office like at 2:20, run in here, put our earphones on and do it. But it's so cool. So they're going to come and tape that, and we're going to do Ask the Tax Lady 6:30 on Tuesdays on WBBZ. Thanks, Chris.
You're welcome.
Okay, so let's talk about what you can do. First of all, you got 3 weeks. If you haven't put money into your pension plan, especially if there's an employer match, you really have 3 weeks to do that, and you're throwing away money. I did all my employer matches yesterday, and some of my employees are getting, if they put in $2,000, I'm matching them another $2,000. So in effect, if you don't put money in your pension plan, if you're somebody where there's a 401k, 403b, a simple or whatever, you're actually throwing money, 100% of the money out the window.
Yeah, it makes you scratch your head and say, why?
Even if you put the money into your pension plan, your employer did the match, and then you took it out in January, even though it's going to be taxable next year, you're still that much further ahead, right?
Yeah.
Because you're going to pay taxes and a penalty if you're under the age of 59 and a half, but it's still nowhere near the 100%.
So you want to find out what your employer matches and put in up to that amount, generally.
Right.
Yep.
Right? Well, at least.
At least.
At
yes.
least.
Yep.
All right. The other thing is look at your portfolio, your stock portfolio. I mean, the market is up substantially over last year. You want to make sure you analyze your investments so that you know where you sit, because once you get your 1099, it's too late. You can have all kinds of capital gain distributions that are going to be taxable and all kinds of stock gains that are taxable. And unless you look at your portfolio, you won't know. Chris, you were talking to somebody yesterday that was doing that, right?
I was. And, you know, every couple months he gives me a call and says, what about this? And this is what's happening. And, you know, we'll sit down, we'll look at your statements, and we'll go
So
through.
now, is this particular client going to sell stock?
He's looking to... He had a big capital gain, and he had some losses to help offset it. So he wanted to know how much money he should put aside for April 15th after he prepays his state tax to give him that nice itemized deduction.
And then in the same token, last year I had a client who owed $80,000 because their broker went and sold everything to put it into a trust. And so you just want to ask the right questions and find out.
Yeah, and if you're intimidated, if you're somebody that looks at your statement and says, I don't really want to know how to do this,
right,
and you just put it in the drawer, bring it in. We'll analyze it for you, because once the die is cast on 12/31, that's it.
Yep.
Right?
Yep.
The next thing we have on here is change your W-4 at work to get cash for Christmas. You still have time before going into debt, using all the charge cards to buy stuff. If you change your W-4 at work, you're going to get your extra money up front so that you have cash for Christmas.
And especially, you could have, in 2015, had changes, life changes. You could have had another child. You could have got married. You could have gone back to school. So what I'm saying is your usual withholdings might not be necessary. So use that money for Christmas.
Or you might have had a couple kids that you were claiming in the past. I had a lady that emailed me this morning, and she says, my 19-year-old son didn't go to college last year. Can I still claim him?
Yikes.
And I said, not if he wasn't a full-time student and made more than $3,900, and he made $5,000, so she can't claim him. And if she had been head of the household, she loses that filing status too.
Right. And if that's her only child, she loses earned income credit.
That's right, and that's a gigantic change. So you want to take a look at that. And again, at EG Tax, we're happy to help you. If you have questions during the week, you're wondering how the end of the year is going to come out, you can call us at 632-7886 or go to our website at egtax.com and ask a tax question, and I'll make sure I answer you right away.
Yep.
All right? All right, I'm Esther Gilius, the tax lady, 803-0930, 803-0930, star 930 on a cell phone. We're going to take a short break. We'll be back with your questions on the other side. Boy, that could be my theme song, Tyler. That's such a great song. What the heck is that?
That's the Foo Fighters.
Foo
Everlong.
Fighters.
Yes.
They're fighting Foo?
They fight Foo as well as hunger and thirst.
Wow.
That's
I'm
cool.
fighting Foo all the time.
Yeah.
Right?
Hunger.
The
yeah.
Foo from the IRS. I'm Esther Gilius, the tax lady, 803-0930, 803-0930. We want to get 3 weeks, people. It isn't just Christmas coming up. I mean, you know, it's like January 1st is on the precipice, and we want to save you money.
Yeah, and by the way, people looking for Christmas loans, we have a partnership with somebody where they offer personal loans. So if you're interested in,
I mean, no matter who's doing it, you got to have good credit.
right? So fair credit. So if you're interested, just give us a buzz during the week, and I'll do a conference call.
Okay, well, let's talk about, all right, like, here's now, think about if you were on my Christmas list. Most everything I try to do is deductible. So, you know, I'm somebody who buys dentures for people for Christmas. Anyway, deductible Christmas gifts, put money in a 529 plan, right? So explain what that would be, Chris.
Well, a 529 is your college savings plan through New York. Well, if you want it deductible, it would have to be through New York State, a New York 529.
Right.
Okay. So you, as a grandparent, can contribute to your grandchildren's 529s, and so they get a nice present, their education.
Right.
And the grandparents get a write-off on their tax return.
On the state return.
On the state
right?
return.
So that's something to do.
Up to how much?
10,000.
Yep,
right?
that's right.
Contributions. You
Yeah.
know, yesterday I did all the balance of my contributions to charities that EG Tax supports.
Yeah, boy, I see that ramp up in the mail. I see lots more of those charities in the mail coming to your home. Roswell, all the cancer.
Right.
Which
Well,
is
it
a
isn't
great
just what they send to you. You got to send to them.
Right.
Right.
That's
so,
true.
So this time of year, we're all in the generous mood, and obviously, if you're somebody that's looking to facilitate two things: to bless a ministry or a charity, and to get a tax write-off, now's the time to do it. And another thing is to clean out your closet.
and bring things
I mean,
to
because
Goodwill.
you know that under the tree is going to be all this new baloney.
Yeah.
And so clean out your closet. What should we do?
The weather is great. You should take pictures. You should take an itemized list, and you can't just bring the bags. We've been to countless of audits, and they want an itemized list, and they actually want pictures of
Right.
the
And
things.
it just can't be a drop-off center.
no,
Got to
right?
have a receipt.
Got to have a receipt. So don't just be lazy. Make sure that it's an attended center to make sure, and it has to be fair market value, right?
That's right. That's right.
So you paid $80 for that leather coat.
What would
Maybe
you
it's a little droopy now, and the pockets maybe are not as nice, so they're not. It's not worth $80 now.
Right. What
It's
would you
fair
sell it?
market value at a garage sale?
That's right. Selling
And
at a
there's
garage sale.
and Salvation Army. .org has a list.
That's what I was gonna
There's
say.
quite a few lists you can get online.
Yeah, and it actually has what the value is if it's an excellent, good, fair condition. So
Right.
they're really helpful.
Right. So that's another thing. Business gifts. Let's say that you are married to somebody who's in business. Computers, printers, office furniture, phones, all those things. Some of them are listed, so you have to do them a little
So
differently.
a ring or necklace would not work, probably, because jewelry. No.
Not a ring or a necklace. No. Business gifts.
Yes. Yes.
It's got to be ordinary and necessary for your job.
Gotcha.
So just because you're pretty doesn't mean anything, right? So those kind of things, those are all deductible Christmas gifts.
Right. And I was thinking, my daughter needs a new computer for college this year, and actually, if she was still an AOL, American Opportunity Credit person, that would suffice.
Right,
That would
the
work.
AOTC.
AOTC. That's what I meant.
Is you can take your tuition
Right.
and equipment that's
Yep.
used for, but you can only take it for 4 years. And so now you're looking at, I think, the 5th year, right? So all you're going to do is lifetime learning. Is that right?
And
This is
so
the
it's not
5th
going to
year?
work. Right.
Right. So
Yep. Sad.
too bad.
But
too bad.
somebody
so
else
sad.
out there might be able to thinking about laptops for their kids and
That's
things
right.
like that. For
I mean,
Christmas
I'm going to
gifts.
tell you, it is so fun when you're going shopping and you make the list and you're thinking, I can write it off too. It's really good. All right, let's go to the phones. And again, 8030930, 8030930, star 930 on a cell phone. And we're going to Terry in Snyder. Hi, Terry.
Lynn, be quiet. Hi, this is Terry.
Yeah, Lynn, you got to be quiet, Lynn. Hi, how can we help you?
This is a question that concerns my wife, Lynn. My wife, Lynn, has Alzheimer's disease, so I have been paying for in-house home care
Okay.
for her for about the last year, and just realized a short time ago that I'm liable for the nanny tax.
Right.
So I contacted a online payroll company to sign up my employees. I didn't realize I was an employer, but I'm apparently an employer now, and have to pay back quarterly taxes for FICA and whatever else other employer taxes
And
there are
FUTA.
out there.
Yep. Uh-huh.
Right. And so since the total money that I've paid out this year is about $20,000,
Wow.
what is that going to do to my personal income taxes? Is that,
All right. Well,
I'm
first of
excited
all,
the guy that usually
there's not
is
only
gone.
just there's not only
Go ahead.
just the extra taxes. You're going to have to pay the 7.85% FICA plus a FUTA for the unemployment tax.
Yeah.
All of that is going to get added together with the 20-some thousand that you're paying for the help for your wife. Okay. And
Okay.
all of that is going to be a medical expense.
Okay.
All right. So how much, Terry, do you think you and she make collectively?
About 160,000.
All right. So you sound very young. You're under the age of 65?
I have a I have a 60th birthday coming up in about 3 weeks.
Congratulations. Well,
Well,
so
thank
they're
you.
going to make you take 10% off. So about 16,000 of the 20-some thousand, 21,000 that you spent is going to be a floor off of the total medical. But you still have the next 3 weeks to pay up whatever other expenses that you are incurring, like maybe special bed for your wife, grip rails, anything that you did, ramps, wheelchairs, anything else to help facilitate her having a better life. That's all going to be deductible, plus all the mileage for taking her to doctors.
And Terry, I was wondering, the people who work for Lynn in the home, is that the only home they work in, is yours?
Not necessarily, but to keep myself out of trouble, I'm claiming everybody as an employee. Up to now, I was thinking that some people were like contractors, but
because the Schedule H, you probably know, to be a Schedule H participant, it means that they have to only be working in your home. They can't work in other homes.
Because if they're doing the same thing elsewhere, they would almost be a subcontractor and self-employed.
Like, for instance, like Visiting Angels, they are they work for Visiting Angels. Then Visiting Angels charges you. You don't owe that FICA and FUTA for them.
Yeah, I would expect. I did use Visiting Angels for a while, and so I'd expect that. Would I get a statement from them stating how much I paid them?
Terry, when you paid Visiting Angels, you're going to peel that part off. You're not going to pay the FICA and FUTA on that part. It would be strictly people that came to your home who you basically say, you got to be here at 8 o'clock. I'm giving you $12 an hour. You leave at 4. And they're pretty much working all for you. Now, if you have somebody else that's part of an agency, again, you don't have to pay the FICA or FUTA for them either.
Well, if I treat people as subcontractors, don't I have to send them a 1099?
Only if they are not self-employed. And they're working for another agency. What I'd suggest, Chris, wouldn't you agree, is Monday, call us so we can talk more personally,
Sure.
with you, because this is a very big thing that's going to cost you money. Want to make sure it's done right. We'll find out who does what, and whoever's in an agency, you don't pay, you don't do the matching FICA for them. Okay.
Right. I understand that. How do I? It's everything's real loosey goosey right now. But how do I clarify whether someone's really my employee or if they're a subcontractor?
Well, if they're an employee, that subcontractor would be someone who does this, and they like maybe be at your house from 12 to 5, and then they go to my house from 6 to 10. That's their business. They're going from house to house
and
doing
they have
this.
they have a business card, and and you put an ad in the paper, and they contacted you and said, here's my business card, I do this for 18 people. They can swap out employees,
and so
they're in control versus you.
And so that would not count as household employees for you.
Okay. All right. Well, that makes a big deal because
Terry, call us 632-7886 on Monday. There's no charge. We'll help you to sort it all out.
And then not to mention the amount of money he's been paying.
Right.
And we're talking about the Schedule A write-offs, too.
Okay?
Okay, thank you.
You're a good guy. Thank you. Bye-bye.
Bye-bye.
I'm Astrogolius, the tax lady, 8030930, 8030930, star 930 on a cell phone. We'd love to hear what you have to say. We have Richard from Buffalo. Hi, Rich. How can we help you?
Hello.
Hi.
Hi. Past year, I've started my not my first full-time job, but a full-time job where I'm making a decent amount of money now. I'm a mechanic, and I bought a lot of tools this year, and I'm trying to figure out what I can do to maybe write off some of that as a work expense on my taxes.
Yep. So you are an employee, correct?
Yes.
Okay. So you have to you have to first be able to itemize, and then your tools, if would be an expense, your union dues, your hand cleanings, anything ordinary and necessary.
Toolbox.
Anything.
How much do you think, Rich, that you spend in that stuff?
I mean, easily, if we're just looking at tools and stuff like that, I've probably easily spent $7,000 this
Oh my
year.
gosh. Okay. So he can do. You got to have proof, but but obviously, if these are all ordinary necessary, he'd be able to itemize.
Right,
Are
right.
you single?
Yes, I am.
Yeah. So you definitely going to be able to itemize. What you want to do is put together all those Snap-on tool bills, so that you can do it. And you're going to do a 2106. And take those as an expense, plus any travel that you might have incurred as an employee as well.
Okay.
Okay?
Yeah, that sounds great. I mean, that was pretty easy. You said 2106?
A schedule 2106. Yep.
Okay.
And you're going to have to do you're going to have to make a 179 election. So, and we're coming up on the bottom of the news. I got a break for news, but if you need any help, call us at 632-7886.
All right, thank you
All right,
much.
thank you. I'm Esther Golias, the tax lady from EG Tax. If you need any help, give us a call during the week. But call us here in the station, 803-0930, 803-0930, star 930 on your cell phone. We'll see you in a minute.
Stop me, 'cause I'm having a good time, having a good time. Shooting star leaping through the sky like a
Okay, who is that?
defying the laws of gravity.
I know.
Is that the Electric Light Orchestra? Who is that?
That's Queen.
Queen.
Yep,
That's
yep,
an old
yep.
song.
Little Freddie Mercury for
And
you.
that is Tyler Stamer. He is our
Producer.
guru producer guy, right?
Thank you very
He's
much.
going to be famous when he's on TV, right? All right, I'm Esther Golias, the tax lady, 803-0930, 803-0930. We're trying to get you ready for January. Other things we want to talk about is medical expenses, just like that wonderful guy that called.
Terry.
He wants to make sure that he adds all of his medical expenses, the mileage, adaptations to his house, special hospital bed,
The care that he's providing
right.
for his wife, the
and
prescriptions,
his own expenses,
mileage, yes.
right? His own expenses, his co-pays, his,
if
his
she's
health
on
insurance.
if she's on Medicaid, any part for insurance,
Right.
you know,
Right.
that's,
So
after
medical
tax.
expenses. So you want to load up everything if you're going to hit that. In his case, 10% floor. College tuition, gifts. You can. Everybody can give a gift. It's Christmas time, right? Hanukkah time. You can give a gift up to $14,000 and not file a gift tax return. You can also give gifts and pay for medical expenses over the 14, or pay for college expenses over the 14, and that's over and above the gifting limit. So, grandparents, this
do.
is an idea for you, right?
Yeah, I was. Becca is applying to some schools, and the cost to apply to these law schools is outrageous. And I said, "Is this part of your Christmas gift?" I mean, and she said, "Sure, whatever." But then when she
Not really.
unwraps it, she's going
Yeah.
to say, "I don't think so."
But just for grandparents, that are thinking about gifting away maybe assets,
Right.
you can give more than $14,000 if you're giving it to pay for medical expenses or for college.
That's right.
Let's see. I also have in here, do a budget for gifting. There's nothing wrong with doing a budget for your gifts for Christmas
And I
time.
was listening to you answer a text question yesterday, Esther. One of your clients was calling and asking about gifting, and you said, don't forget to concentrate and focus on the 5-year look-back for when nursing home.
Look-a-back.
Look, I know I'm not talking. My mind is not working today. For the look-back, when you're going into a nursing home, they're going to look back to see when you made the gifts,
Right.
and so you want to be conscious
Right.
of
So
that.
so even though you gave away your assets, if you are going to try to get into Medicaid, into the nursing home, there is a 5-year look back. Other thing is holiday job trip. So let's say you say, of course it's not snowing here, so it just like ruins everything. But let's say you wanted to get out of town, get out of Dodge for Christmas time, and you say, gee, I'd really like to work in Florida, and you arrange
Interview.
A job
an interview,
hunting.
right?
Right.
So it would be a job hunting business trip. Now your kids would not be deductible, but if the reason
Portion.
that you went, your airfare would be deductible and part of your hotel.
That's right.
Right.
Well, make it a true holiday and leave the kids at home.
Oh, God, some of the best Christmas movies are when they have those family trips and you're all getting together and you're eating turkey. Some of the best. Just the time together with your family is both enjoyable and comical.
That's true. That's true. Let's go back to the phones. Again, 8030930, 8030930, star 930 on cell phone. We got Jack from Alexander. Hey, Jack, how you doing?
Fine, thanks.
Where is
couple
Alexander?
questions.
Wait, Jack, where's Alexander?
Just south of Batavia.
Okay, well, we love Alexander. What can we help you with?
Well, I buy houses down in Florida, and I was wondering, can I take a house and somehow put it into an IRA?
Well, here's the thing. You can't take a house and put it into an IRA, but you can. But if you are diligent and obey the rules, okay, you can take an IRA and buy a house with your IRA. Now, that may be what you were asking, but
No, I was looking at putting the gains through the IRA.
okay. So in order to put money into an IRA, you have to have wages or self-employment income. Rental property is considered a passive investment, and so that's not for wages. So
I buy the houses and sell them.
yeah, so that's now if it is your job to buy and sell houses and houses are in inventory, then that's a Schedule C. So do you put your buying and selling, are they all short term?
Do you
in
have
and
another,
out?
Do you have another job, Jack?
Yeah, I have another job, and it's basically all short term.
They're all short term. So do you have do you inventory these houses? I buy them, fix them up, sell them, buy, fix up, sell up, buy, fix up, sell. Is that what you're doing?
Yes.
Okay, so that's possible.
That's
that could
pretty
be a
much a
Schedule C.
business.
Yeah.
So you can contribute money to an IRA, but in order for the houses to be in an IRA, you would have to have money sitting in an IRA and have a self-directed IRA and say, okay, now I'm going to buy this house on 31st Northwest Street down there, and it has to get approved by the
But I'm thinking
financial.
I'm thinking he's saying, can you take the net profit and put the money into an IRA? That's what you're saying, right, Jack?
That was my original
Right.
question.
Okay, so you can, if you aren't looking for capital gains, if you really truly are in a business of buying and selling houses, okay, and you're not looking for capital gains distribution and you're putting it on a Schedule C, then you have to pay FICA on the bottom line, okay,
right.
and you can set up a simple pension plan, an SEP, or a KEO, if that's the case. But you cannot do both. You can't say these are Schedule D transactions and do that, because Schedule D means it's sale of capital assets. So either you're in a business of buying and selling houses and your houses are inventory and you're not going to take any capital gains, or it's Schedule D, and if that's the case, you can't use the net profit for putting money into an IRA.
I think I kind of understand the basis of that, but let me ask you another question.
Yeah.
My sisters each put in some funds, say $20,000 each, so my son put in a little, and I just take the distribution after I sell the house and give them back based on the
Their
percent that they gave, and I pay the tax on it and just give them the distribution. Is that legal?
All right, you really need to set up a partnership. And so what you do is everybody has a percentage of ownership. So looking at 100% ownership, you might have 40%, your sister has 20, your sister has 20, and your son has 10. So that equals 100%. Then at the end of the year, you come up with a net profit, and you give everybody a piece of the action instead of on a W-2, on a K-1. And so that's the way to do it. You're not supposed to pay the taxes and give them what's left. So you need to set up a partnership return. What I think you need, Jack, is to talk to a tax professional and get your ducks in a row. So if you want to call us, we're very happy to help you with that. Or you can just email us through our website at egtax.com, and I'll be very happy to help you.
Well, I think that's an appropriate step. I do thank you.
You're welcome, Jack.
Okay,
Bye-bye.
Bye-bye.
I'm Esther Golias, the tax lady, 8030930, 8030930. And let's see, we're going to go to Larry from Georgia. Hey there. How are you?
Esther, I'm doing good. Esther, darling, before you said it, your mind's slow. Esther, I will tell you, darling, Esther, when your mind is in fifth gear, my mind is in first gear. So,
I like that. That is true, Larry. Very well put.
Thank you. Esther, a couple of fast questions. One, Esther, I plan to do a fair amount of traveling on my motorcycle, my car down the road, right? So I'm thinking of maybe investing in one of those medical alert devices.
Yeah.
I wonder now, of course, I'm self-employed. So my first question is, my understanding is I have to get a medical note, like a doctor's note for that, before I can deduct it. Am I correct?
No. I mean, those medic alert, again, it has to exceed, Larry, depending upon your age, either 7.5% of your adjusted gross income or 10%. So when you add your whole medical together, that's a lot of medical. Then into that, you'd put your medical alert.
Okay. That's my second question is, I'm 67 years young, good health. My plan was to not take Social Security until I'm 70.
Mm-hmm.
Recently, my Medicare premium went up exponentially because I earned a lot in 2014. I was told by CFP that I could have kept that premium a lot lower if I selected to take my Social Security now instead of waiting until 70. Is she right or is she wrong?
I don't know, Chris. You know.
I was muffled,
Larry, I'll tell you, you got to call Social Security with that one. I really don't know. I don't know the intricacies of what they're doing regarding your Medicare if you aren't taking Social Security. But one good thing about Social Security, give them a jingle, and they will talk to you specifically about your situation.
I will.
All right.
Thank you so much.
Thanks, Larry.
Bye.
Y'all have a good day. Bye-bye.
I know some people have said the longer you wait for Medicare, the more expensive Social Security will.
Well, you know, this is the first time that Medicare and Social Security premiums have actually dropped for people waiting. Not premiums, Social Security payouts have actually dropped for people that are waiting till they're older to collect. Mm-hmm. So, because Larry, Social Security's in big trouble, you know.
Yeah.
So anyway, all right, we're going to go to Shelley. Wait. You know what? Shelley and Don and everybody else that's holding, I'll get you on the other side. I'm going to take a short break. 8030930, 8030930, star 930 on a cell phone. I'm Esther Gullius with Chris Fabian, Tiffany Fabian. See you on the other side. I know. This is my speed.
This is Blue Eyes.
Like a fella once said, ain't that a kick in the head?
Audrey?
No, that's not Gene Autry.
Perry Como?
No, Dean Martin.
Ding, ding, ding. Congratulations, Esther.
Good job.
Okay, I'm Esther Gullius, the old lady from EG Tax, 8030930, 8030930, star 930 on cell phone, talking about stuff you can do by the end of the year. Okay, if you're in business, what?
You said the old lady, and I was thinking you were with your mother today, and she was telling you what to do. Do this, do that, do that.
My mother acts like I'm 12 years old and I have Pampers on. I said, Ma, I'm an old woman. Stop it already. Anyway, if you have a business, this is a great time to buy a new vehicle, especially if it's a truck, right?
6-ton vehicle.
Well, or a truck.
Right.
So because you'd be able to do special expensing, and it would save you a lot of money and save FICA. So that's a good thing to do before the end of the year. Business equipment. We're getting new phones, right?
Yep.
Computers, printers. All that stuff. I mean, hint, we're doing it to save money. Other things for Christmas, get a large family gift instead of a bunch of small things. Maybe get a new TV. I saw a gigantic flat screen, like 55-inch for like $350.
I know. Yeah, that's a great. The electronics are phenomenal.
Oh my gosh!
You could make it an entertainment room in your house.
And I'm going to tell you, if you haven't tuned on to Amazon Prime, they are remarkable. They are just remarkable.
You can save a lot of money.
Right. For those of you that are going to do the $14,000 gift, and that's what you're going to do, you can give the gift now and again in January, right?
Yep.
So you can do $14,000 per person per year now and $14,000 in January. So in a short period of time, you do $28,000. So, okay, I guess I got more, but I'm going to go back to the phones, and we're going to go to Shelley. Hey, Shelley, how you doing?
Hi, how are you?
Good.
My question is regarding a church I started last year. I started a church, however, on the DBA license, I listed it as a sole proprietorship. And so I was wondering, do I have to claim the offerings that I received as personal income, or do I have to claim it as a nonprofit organization?
Okay, Shelley.
How do I claim that?
Shelley,
Yes.
you need to unscrew the spaghetti, okay?
Yes.
Because it's a church. By the fact that it's a church is considered to be a not-for-profit organization. What I would suggest you do is that you would come into the office, and we're going to get you filed with New York State as a qualified not-for-profit so that you're doing everything correctly. When you call yourself a sole proprietorship, that means that you're in business to make money. If it's really a church, then because it's a church, by essence of it being a church, you're a ministry, and it's not taxable. But the forms you have filed basically says to the federal government, I'm trying to make money. So you want to make sure you get this thing straightened out before December 31st.
You're going to make an election.
Right, but do I have time to straighten it out before December 31st?
Yeah, because
when I went back to the county clerk's office, they said, well, now you have to write to Albany.
Right, and that's part of what we're going to help you to do. So, yes, as long as you know that you were really a church that was the Holiness Gospel of Jesus Christ, number one, or whatever it is. I mean, that's what it was, and you made a mistake. Wouldn't you agree that she'd be able to, you'd be able to prove that you didn't know?
Checked the wrong thing.
More or less. More or less.
Yeah, I did.
You want to make sure you get it straightened out, though, Shelley.
Right, but in the meantime, should I hold off on filing because I work also.
Okay,
and
but the not-for-profit needs to be. You need to fix this as soon as possible.
And you don't have to hold off filing your personal return.
You need to also get it fixed because the people who have been doing tithing to the church won't be able to deduct it until it is approved a 501c3.
So as soon as you qualify for the not-for-profit, at that point in time, because it's a church, they'll be able to take the contributions as a deduction. So you want to make sure you do this right away. You know the Bible says to do everything decently and in order, and this is what you got to do.
Absolutely.
Okay, Shelley?
Okay. All right. Thank you.
Bye-bye. And we're going to go to Don. Hey, Don. How are you doing?
I'm well. I was on workers' comp for like a year and 6 months. I finally received a settlement for that. Do I have to claim that on my taxes, or is that
no
considered?
Workers' comp is not taxable, and so usually it is something that is not taxable. So the nice thing is you won't have to declare that on your return, Don.
Oh.
And so did you get
any? It
any
was a workers' comp settlement, right? It wasn't Social Security?
No, it was workers' comp.
Yeah, then it's tax-free.
And for the year and 6 months, did you do any other work at all?
My company was paying me half of my wages while I worked for a nonprofit organization.
All right, but
I'm a truck driver.
Okay, you claimed the wages, though, when you did your tax return, right?
Excuse me?
You claimed the wages when you did your tax return, though, right?
I didn't start doing that until, it was January of this year.
All right, so they'll send you a W-2 for that. But your workers' comp is going to be tax-free.
Okay.
All right?
All right, thank
you. Don.
Thanks,
Bye-bye.
Don. Hope you're feeling better.
And then we got Sean. Hey, Sean, how can we help you?
How you doing?
Good.
So I'm in the military, a young man. I'm sitting around 22 right now.
Thank you.
And I just came into a couple $1,000s of extra money. And in the future, probably thinking about the next 6 years or so, I'm thinking I'm going to be getting a mortgage out for a first house. But I'm going to a lot of personal finance classes. They're telling me to start my Roth IRA early. So would it mean more money for me if I invested in a Roth IRA early, got this extra money out saving for the future, or would it mean more money if I just made the down payment on the house better?
Well,
that's a crystal ball kind of event.
I mean, how long are you going to plan on being in the military, first of all?
This will not be. I will not be receiving the pension. Probably around 5. 10
Okay,
years.
so then what are you going to... Because it's our lovely crystal ball that no one has. Because if you're not going to have a normal pension when you retire, a Roth IRA really isn't going to be saving you money in the future because you won't have... Because if you were like in the military for 30 years and you had a $40,000 a year pension from the government, a Roth IRA would be great because that income would be tax-free when you retire.
So Chris is saying go towards your second option, which was the home purchase.
or a traditional.
Or a
IRA.
traditional.
Or a traditional, but he was talking about the home.
Here's the thing, Sean. Right now, if you're, I'm assuming at some point in time you're going to get married. I'm assuming. Right now, in 2016, you wouldn't pay any taxes until your income exceeds like $23,000, filing a joint return, not counting your Social Security. Many people put money into a Roth, don't get any deduction now, and will never take it as a tax deduction later. It all depends on what's going to happen in your future. So I guess what I would say right now is what your investment person is saying is make sure that you invest it. A Roth is good to put it into if you're ever going to have a taxable situation when you retire. I guess I would say put it into a traditional IRA right now that you can always roll over into a Roth if you are in that kind of a situation later on.
Also, with putting it
and
in...
he's got a VA pension, so he can get it for nothing
With putting
down.
in a traditional IRA, you could take up to $10,000 out of your IRA to put down on your
On a
first-time home without a penalty. It would count as income, but you would get the deductions as you go.
Right. So I would do a traditional IRA starting off. If you end up being the president of the world and you got $1 million pension and you know you're gonna you don't want this, you can always roll it over into a Roth later on. But I'd start off with it as being deductible. The important thing is you want to start saving money, which is true. And remember, because you're in the pension in the VA, in the military, you can get a VA pension with nothing, a VA mortgage with nothing down.
Sounds great. All right, thank you very much.
Thanks, Sean. Bye-bye.
Great question.
And we're going to go to Nancy in Batavia. Hey, Nance.
Hey, hi. How are you?
Good. What can we help you with?
Just it's an IRS question. Had a sibling away, and I'm the executress, and he owed the IRS money, a substantial amount. There was no really money after paying for funeral and all that kind of.
Right.
So I went to an attorney, and he just said, put a note on the tax return that said the estate is, for lack of better words, bankrupt.
Right.
Essentially. So I did that, and I didn't hear anything yet. Is there anything I need to be concerned about?
No, I mean,
or that
you
that
can't,
I need to follow up with?
No, I mean, when you are the executor or executrix of an estate that is basically insolvent, and there is an outstanding liability, they cannot reach into the grave and do something,
Right.
and you're not responsible for your brother's or your siblings' deaths. So you
brother.
just it's a very sad thing. I'm sorry to hear about the death, but you don't have to worry.
And you've done everything
Okay,
right.
so and then
If there were assets, then as the executrix, you would have to have liquidated those assets and paid the bills. But since you don't have any assets, you don't have to worry.
Okay, what about filing a 2015 tax?
Did he have any income or she have any income?
Yes, he did.
All right, so you're going to do their final return for them. And
Okay,
again, you're not going to be responsible. As the executrix, you're responsible for doing the final return. But
okay.
Yeah, Chris, you
I was
said-
just going to say, if there was a refund coming, they'll just keep it.
They'll keep it, yeah.
Okay.
All right, thanks,
Oh,
Nancy.
good. All right, well, that just kind of validates then.
Oh, I'm
So
glad.
Thank you.
Thank you, dear.
Okay.
I'm Esther Golias, the tax lady. During the week, if you need help, you can go to our website at egtax.com. You can call us at 632-7886. But I'm going to tell you, you got 3 weeks to get ready. Many people are off their game because it isn't snowing. You know, they're thinking, gee, I think it feels like September. It kind of does feel like September. But 3 weeks from now, the IRS will be at the front door. If you need any help, we're very happy to help you. Until next week, I'm Esther Golias with Tiffany Fabian, Christopher Fabian, and me. And we'll see you. If you need any help, go to our website. Bye-bye. Have a great week.